Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, May 3rd, 2023. So the Fed came out, did its what everybody expected, quarter point raise. But what I've been explaining in the morning notes and everywhere is that just because they kind of hit that target doesn't mean they're going to have to stop. They may pause, but they're not going to be cutting rates, and that's really what a lot of people, as I said, there's a real lot of traders that are traders. Let's just say financial advisors, money managers, whatever you want to say, um, that really came into the market after 2009, after that crash. So the only thing they know is the Fed. They don't know how to trade a market. They don't know patterns. They don't know cycles. And what happens is they're everybody's all rooting for the Fed to start lowering rates, but lowering rates, as I said, I don't, unless we go into a full out recession, which is has pretty high odds, honestly. That's the only time they're going to start lowering rates. Because right now there's absolutely no reason for them to start lowering rates. Inflation is still high, employment is there. There's just nothing in the cards, and I'm really surprised that a lot of people were shocked that he didn't say we're done. And it's we saw some up and down movement. I personally don't like to trade Fed decision days because it just gets too whipsawy on it. Yeah, the S&P was made it from the 4094 up to the 4149, and then we dropped right back down. So that's behind us. Now we have jobs numbers on Friday. That may be a little bit more market moving. We have to wait and see on it. We have half a position with SDS. We're up on that with both quarter entries that we had, because one was when we were at when the S&P was right around that 4150, and then the other one was 4108. So we're in the green on it, but we're not. I'd like to see it get a better fill, meaning that like get a full position. But and what I'm this is one of the reasons why I'm not counting out that we're going to come back up and test these highs. When we come down, here's your major support, 4072 down to the 4050 area. If we come down here, notice we're already starting to set up bullish divergences. So I think it's very dangerous shorting right here. I would rather wait, and then if it breaks through it, just wait for the bounce, and then this is used as resistance. If it bounces here, then we know the areas to start shorting. And like I said, this is a swing trade. All you guys know when to anticipate when the low is going to come in, and that's probably going to be when most of these people are panic selling. We're going to be doing the buying and moving to SSO. So as I said, these cycles repeat. People that have been around for quite some time with us, they repeat every 4 to 8 months. So we're not in trades all the time, but we're in trades that have really good returns, and that's all we need, because I'm not a day trader. I have zero desire to be in front of my computer every minute watching every tick. I'd rather know what is going to be playing out, and then we start making start building our position. So if we head lower, if the bears can get through this 4087, we're going to come down to the 4072, and then possibly down to the 4047. That this is would be the area that I'm anticipating that things will buy. Now, another little one that you want to keep an eye on is that we have this little bit of a gap that's at the 4028. So we have a lot of say different support levels for the bulls here, and I do believe one of them is going to hold. If I'm wrong and we head down, then I just wait for the bounce and we fill our position when we get the bounces. If we head higher, then we average in on our positions at better prices. And that's really the name of this game, is just controlling your emotions, anticipating what the next move is going to be, and building your position, because the market's not always going to do exactly what we are anticipating. So I like to layer in positions, so it kind of takes the stress off of it. The bulls, they're going to have to get above the 4126. If they do, this was the high at 4146. If they get here, then I believe we're coming up and testing these highs. So I'm easy either way. I'd be very careful shorting in this area. Not that our predictive analytics model has changed, but what's going to happen is going to allow for one of these, nice size bounces if it does play out like that, and we just use that to short. So let's see what plays out tomorrow. Have a great night, and I'll